In today's session of Visual Jforex, I will be continuing with the demonstration of the algorithm development using the indicator named linear regression angle. So let's get started for today's session. We will be heading to the Visual Jforex board, which has been developed by the Dukascopy Bank SA. So far, I have done the instrument subscription where the default instrument is being matched with the candle instrument, which in turn is being matched with the Euro USD. Make sure that this algorithm will be executing the trades only on the Euro USD. Then the position amount has been defined at 0. That means there can't be any pending or the open position in account, and if there is any, no fresh trade will be initiated. Then I got these three linear regression angle blocks, which will be utilized. The output values of these three blocks will be utilized to do the comparison to see how the linear regression angle is unfolding. Then to get the price action data, the get historical candles is being used in conjunction with the loop viewer to retrieve the individual characteristics as and when needed. The 10 seconds historical candle blocks to pinpoint the exact entry and exit point in conjunction with this hourly candlestick, and to make sure there is enough for buying or selling momentum while executing the trade. These conditions have been defined where we will be looking at the difference between the closing and the opening value of the last three candles, which we have defined using the get historical candles cluster, candle 16s, and the output values for these are these have been defined as THC, and minimum difference has been set at 12 pips. That means the difference between the open and close price should be more than 12 pips for the execution of the order. Then moving on to the buy side, the output value for the linear regression angle are being compared in these if-else statements. The last hourly linear regression angle value should be greater than the linear regression angle value 3 hours back, and in turn the value of linear regression angle 3 hours back should be less than the linear regression angle value 5 hours back. So this is the comparative analysis, and only when we see reversal happening in the linear regression angle value after having been in decline, we start looking for the buy trade. And as I said, there should be enough of volatility. So this condition that difference between the closing and the opening price should be greater than 12 pips. Now all we have to do is pinpoint the exact entry point where the trade execution is supposed to happen. For that, I will have to rely on this historical candle data. Here it is, 10 seconds data. We will be comparing the output values for candle 18 and candle 19 with the output value for candle 20, the closing prices. So let us take one more if-else block, and then open at market will also be required. So here, only when the price action starts to move on the higher side compared to the last hourly close, the initiation of the trade should happen. That means the output value for candle 19 will need to be taken into consideration, and that is in candle 19 auto created variable, and this candle 19's close should be less. Earlier it was lower, then in the last 10 seconds it has moved higher. So here these will be compared to candle 20 is closing value. And candle 18 is closing value. Candle 18, candle close would be greater than candle 20, candle close. Okay. So the shift value of candle 18 is 1 and the candle 19 shift value is 2. This is the look back period. This is the closest 10 seconds candle which has closed higher, which needs to be closing higher, and the prior candle of 10 seconds should have closed lower than the candle 20. So this is greater, whereas this needs to be less. Candle 19 is closed would have been less than the candle 20 is closed. Here the buy trade will happen. Euro USD default trade value slippage 2 pips should be good enough. Now comes the question of defining the stop loss and the take profit. For last couple of algorithms, we haven't really tinkered with the take profit and stop loss much, and we can define any value. Now the default value is of 25 pips, or there is one more way to go about it, is where you keep it dynamic depending on the price action. You can have different stop loss and take profit levels. If there is less volatility, then the stop loss and take profit will be fairly sharp. If there is much more volatility, then the stop loss and take profit will be placed accordingly. So we can make dynamic also. In today's session, I will demonstrate to you how we can make the stop loss and take profit more dynamic. For that, we need one more calculation expression block. I think two more, not one more. First, we will take one. This is the okay, and here we will need to look at the buy side closing and opening difference. So we will be keeping the volatility in mind, and whatever is the starting point for the recent upside momentum will be looked at as a possible stop loss level. So to make sure that is the case, I will be converting this difference between these opening and the closing value into integers, and for that I will have to create new variable, conversion. Okay, stop loss 10,000. Since each pip of Euro USD comes after 4 decimal points, I will need to multiply it by 2 raised to the power 4. Sorry, 10 raised to the power 4. Okay. Uh, Let me see what went wrong. Okay, one more time I will have to create new variable here, it looks like, and it is going to be named and this will be a1 into a2 SL. Okay, now for take profit, again one more calculation is needed. Take profit, we will simply double it, and that should be good enough. One more calculation expression. And here we will need to and and SLP and BCD by side candle difference, and which is being multiplied by 10 raised to the power 4 stop loss pips, and one more variable will be needed, and this will be target price multiplier. Its value will be 2, so it will double the target price. And the result of the calculation is going to be used as a take profit level. A1 into A2 into A3. Stop loss and the candle difference, stop loss pips, candle difference, and then for target price the ratio of 2. Okay, Buy side is done. We have made these changes to the stop loss levels and the target price, because of which these both the parameters have now become dynamic, and whatever is the underlying volatility, it will get reflected here while placing the order by this algorithm. And with it, I will be signing off. So far, it looks good enough to me. If there is any error of omission, you can just write it to me in the feedback section, and I will be more than happy to take the discussion forward. See you tomorrow. Goodbye.